traders, it's three-wave trading coming at you with another video. It's been quite a while since I posted one. My apologies, but I've been on vacation a lot of the month and busy with a lot of stuff, so just haven't really been doing a lot of trading or making a lot of videos. Today is December 26th, which is the day after Christmas. I did decide to log in today and take some trades. Probably wasn't a great idea to do that. The volume today was very, very lethargic volume. The movements were very slow and laborious, and the market just wasn't moving today. So I finished up by about 11 o'clock, right about in here, and I just called it a day because it was just a very slow day. So today I want to share with you a couple of different support and resistance levels that I'm using that are I think very, very helpful, and that not a lot of people talk about, but they're, I think, good to have on your chart, and they're very helpful. So I'm going to start off by explaining, for those of you who don't know, what some of these EMA lines are on my chart, which I use every single day and which I find very helpful. And then I'll go into the horizontal levels that I want to share with you today. Okay, so the diagonal levels, or the EMAs, exponential moving averages, are just that. I have 5 of them on my chart, and I'll start with, this is a 5-minute chart right now. So I'm going to start by explaining each one from the fastest to the slowest one, okay? So this blue line here, right here, is the 1 minute 8.5 EMA. This one, this gold one, is the 1 minute 20 EMA. This kind of blue band is the 5 minute 8.5 EMA. This is the 15 minute 8.5 EMA. And this is the 1 hour 8.5 EMA. Each of these EMAs has its own time and place of use. But as a day trader and as a scalper, I'm primarily interested in the first two because they're the fastest and the most commonly touched. So that's just something to keep in mind. I mean, I take trades off those two levels all the time. This is a 5-minute chart, but I'm actually I'm using the 5 and the 15 to kind of get a bigger picture feel for what's the greater trends are, the bigger picture momentum, etc. But I take my trades off a 5-second chart. So as you can see here, when price begins to trend up, you will see quite often backtest come and backtest the 1 minute 8 EMA before going higher, and that happens all the time. So we have it as the fastest EMA on the chart. There actually are a little bit faster EMAs that I do look at, and I've got that in cloud formation here. That's the 1 minute 3 and 6. Okay, I don't use them too often. When price is really screaming, sometimes I will take a look at those in conjunction with something else. For example, I'll take a look at those in conjunction with some horizontal grid line levels. But for now, I don't want to confuse the issue too much. So I'm just going to say that the blue line here, which is the 1 minute 8.5, is probably the most common EMA that I use as far as scalping. But I can also use the 1 minute 20 and this 5 minute 8.5, 15 minute 8.5, and the 1 hour 8.5 are also good ones to use in conjunction with others. So it's always nice when you have multiple lines converging and you can use combinations of diagonal EMAs as well as horizontal grid levels. So as far as the grid levels, I'm going to tell you right now that I always have on 4 horizontal grid levels for every 100 points. And so basically that's the 00 here, which I have marked in green. I have the 26, which is marked in purple here, the 50, which is marked in green, and the 77, which is also marked in a little bit darker shade of purple. So those 4 quadrants are always on my chart. They're always areas that you're going to see some support and some resistance. especially when it's in conjunction with other diagonal or horizontal support and resistance levels. Okay, so today I'm going to get into a couple of things that are kind of new to me that I've been experimenting with, and I'm going to share with you how I use them and how I find them. So the first one I'm going to share with you is the fast cross. Okay, and when I say fast cross, I mean the fast cross of the blue line, which is the 1 minute 8.5, across the gold line, which is the 1 minute 20. So as you can see, I put a little bit of a marker here to mark that fast cross. But that fast cross, oftentimes what will happen is a short time later, price will use this level as support or resistance. So when you see a fast cross happen like this, and you can just always kind of keep your eyes open because your price is always close to these two lines anyway. So they're always within your view if you're watching price candles, especially the fast price candles. So you're always going to see these, and you know when they're about to cross because it creates, kind of a pincher's, kind of a pointed triangle. And so you can kind of see when it's getting close. So when they do happen, I recommend quickly putting a zone over it. And you can use a rectangle. And if it's a fast cross to the upside, just paint it green. And that way you know that it's representing strength to the upside. So then what you're looking for then is a back test of that level. And it can happen pretty quickly. For example, this one occurred at 9:36 and 10 seconds. And by 9:37 and 40 seconds, a minute and a half later, price had retraced back to it. And in conjunction with this one, which is the 1 minute, the 15 minute 8.5 EMA, right? So between these two, it created a really nice bounce point, right? And you had a color change I use Heiken Aishi candles. So that is a type of averaging candle that averages the existing candle and the one right behind it. Anyway, you can see that we had a really nice bounce here at 9:37 and using this fast cross as support as well as the 5 minute 8.5 EMA as support. So we had a color change here on the candles and a couple of really powerful support levels here. And then we're off to the races that way. So that could be a buy right there. So this is how they're used. Now, I'm just going to show you one more here real briefly. While this was going up, we had some resistance here, up here, and then we had price pushing back down. Now, as price pushed back down, the fast moving average followed price down until it got to this point here where we had another fast cross. So now that we have another fast cross, let's go ahead and mark that real quick. We might be able to use it in a few minutes. I'm going to change it to a red color because it was a fast cross to the downside, right? This is happening at 9:51:35. At 9:53:15, which is about a minute and 45 seconds later, what happens? Price comes right back up to it, right? Wicks right into it. You see the candle starting to change color. There's also 1, 2, 3 other levels right here. We've got the 1 minute 8.5. We got the 5 minute 8.5 and the 1 minute 20. Everything's together here. I don't know if you can see this, but everything is together here. You got 1, 2, 3, 4 levels of resistance, okay? Price rolls over. You can see that very clearly, that the strength and the momentum is curling over here on the MACD. And so that is a great short entry, right? Enter short here and write it down as far as you can, okay? So those are two real quick examples that happened in the first 23 minutes of the market of how you use the fast cross as a additional level of support or resistance. Now there's one more I want to show you, and it's called session volume profile. And I don't know if you've ever experimented with session volume profile, but essentially what you're doing with it is you are, let me just go ahead and find this real quick in the indicator section. SVP, I think it's called Session Volume Profile. All right. So what's going to do? It's constantly updating. So it's a fluid indicator. What it's doing is it's finding the price on the chart that has the highest number of contracts traded at. So it's basically it's a sideways bell curve, and the top of the bell curve here is the price on the chart, and this moves as the day goes by because you'll have more volume here, more volume there as the day goes by, but it's always updated, showing you the price on the chart with the greatest amount of volume. So at the end of the day, the price on the chart with the greatest amount of volume was about 25,878.75 cents. And so that is the point of control. That's called the point of control. All right, so now what you can use the point of control, and I'll show you at the end of the day how that was used on a trade here. You can use the point of control as another form of resistance or support. And I use it all the time. And if you're scalping, it's kind of nice because price has a way of coming up to it and bouncing off of it. So for example, I can see that the point of control is right up here. Let me make this a little bit darker so it's easier to see. Okay. I can see that the point of control is up here. And I can see price is heading up towards that point of control. I can see there's a couple other resistance levels right around it. For example, this is my 5-minute 8, and this is, my 15-minute 8.5, and my 1 hour 8.5. I can see those are there, okay? So it kind of makes sense for me to think that, okay, if price can get up into this zone, which is a confluence of multiple resistance levels, then it may reject real hard off that. So what I'll do is I'll come up here, and as price is heading up towards this area, I will be sending a stop sell order that will only activate once price is above that level, and I'll catch it on the way back down because price tends to come up to these levels and then snap down suddenly. Okay, that's the strategy that I'm using. I'm using the strategy of price coming up into a level and then strongly rejecting off that level. Okay, it's a little bit more of an advanced scalping strategy, but it's one that I really like. It tends to work really well. I don't know if you can see how big these wicks are. For example, here, the price as it rises doesn't have a lot of volatility in terms of big wicks, right? But once it gets up into this area here, look what happens to the volatility. You got a huge slam down of price here, right? It just slams down suddenly. So what I do is when I see it's coming up to the point of control, as well as a couple other areas, what I'll do is I'll start putting in phantom stop sell orders. What I mean by that is when I right click on my trading dome and try to enter a sell order, a stop sell order, it won't place the order until price is above that level. Okay, it'll just reject the order because you can't do a stop sell when your order is above the market. Okay, you can only place a stop sell order when your order is below the market, as opposed to a stop limit order. So instead of using limit orders, I use stop orders, and because price is moving very, very, very bouncing around quite a bit, I'll be right clicking and trying to put in a sell stop order on the chart, and it'll keep rejecting it until price bounces above the order. And once price bounces, and I try to put this order as high as I can given where I think it's going to reject. So once price just slides just above my order, and I'm constantly trying to place the order over and over and over and over and over again, and it keeps rejecting. But once price bounces just above my order will be accepted, and then at that time, when price comes slamming back down, it'll fill my order on the way down, and typically I'll make my scalp, I'll make my target almost instantaneously. So that's a very advanced kind of sell stop order, but you can use it in areas where you have very strong resistance levels, like the point of control, for example. So as you can see here, the point of control was tested 3 separate times, and 3 separate times it rejected very strongly, and this is towards the end of the day. So I mark it with a POC, point of control. All right, and that comes from, again, using this session volume profile, which automatically will mark for you the price point at which the highest amount of contracts have traded hands. That becomes a great support and or resistance level, depending on which way the market is going. Now, I've just shared with you a lot of information. It may be a little bit overwhelming, but just trust that trading is all about support and resistance levels and finding the best ones. So when you get confident in your ability to find and use support and resistance levels that are very commonly used by other traders, and then you start seeing confluences of these support and resistance levels, then that's when your trading can really start taking off, and you can start having a better win rate and more success in the trading world, because support and resistance levels, especially when you have like a double pattern, a confirming pattern, W pattern, or a double bottom pattern against a support or resistance level, like you have here against this 1 minute 20. You see these patterns play out all the time, right? So you start to get used to seeing how price responds and reacts, and you can kind of anticipate where these bounce points and these resistance and support levels are going to take hold and create good trades for you. All right, that's all I got for you for right now. Hope you've had a great holiday season and a happy new year and a successful 2026 coming up.